Hello traders, I would like us to look at something very important today, and this is a type of video that you won't miss, most especially if you are new to forex trading, or probably you have been trading the forex market for a while now, but you always encounter things like this. This particular video would help you to mitigate or avoid such mistake 80% of the time. It is not that you won't be able to hit stop loss, but it will change the way you see the forex market. Now, in today's video, I would like us to talk about market manipulation. And what is market manipulation? Market manipulation refers to an illegal or unethical practice where institution or broker artificially influences currency to gain an unfair advantage. In quote, and unfair, to tell you that market manipulation, whatever the institutions or the brokerage are doing, it is to get an unfair advantage over the market. Now, there are so many types of market manipulation out. The one that I would like us to look at today, and the one that I have seen that has been a challenge to so many forex traders out there, is what they call the stop loss hunt. And what does the stop loss hunt means? Let us look at this demonstration right here. This is your resistance bar and this is your support bar. Now, as a trader, if price is trading to the upside, it is consistently making higher highs and higher lows, higher highs and higher lows. Now, it is presumed that once it gets to this resistance bar, sellers are patiently waiting for price here to push price downward. Thereby, once price gets here, it starts making lower highs and lower low, lower highs and lower low. Immediately price got here, there was a change in direction to the upside. But now let's take for instance, you come into the market and the market is trading to the upside. And for so many traders, there is a pending order right here trying to say that once price gets to this a particular zone, this resistance zone right here, it should trigger that order and start heading to the downside. But once you enter this particular trade, it is believed that your stop loss should be above here, right? Should be at least above this particular zone right here. Now, for some reason, price got to this bar, but instead of reversing to the downside, price broke this particular bar, take you out for a stop, and then start heading to the downside. Same thing happened when price got to this particular zone right here. There have been orders, pending orders placed here telling price that since price came to this zone and could not break it, came here and could not break it, price should also come here and also start rallying all the way up. But for some reasons, when price got to this particular zone right here, it took you out for a stop before rallying again to the upside. Now, how can we prevent this? That is the reason for this video. Let us look at the chart for a real life example. Now, this is a real life example on my chart. This is my resistance bar right here, and this is my support bar. As you can, if you can see, price came to this support bar right here, rallied all the way up, did same thing here, here, and here. And let's say you come into this market, and because you've seen that price could not break this particular bar, because you have seen how many times price has retested this particular bar, more especially on a higher time frame like 4 hour. So it is expected that this bar is very solid. Then for some reasons, you placed a pending order here telling price that once you get here, trigger me in and head all the way up. Then once you enter this market, your stop should be at this particular low right here, this particular low that price created previously, right? But for some reason, price came down, trigger your stop loss, then reverse to the upside. So many traders have encountered things like this, and this is how you should be able to avoid things, and this is how I was able to avoid such thing. This video is not trying to tell you that you will not hit stop loss or you will never be stopped out of the market, but it is to avoid things like this from occurring 70 to 80% of the time. Now, after doing my analysis, and I'll be expecting price to get to this zone before heading all the way up? Firstly, I'm not going to put a pending order here. I am a type of trader that don't know how to use pending order. Instead, I'll wait for price to get to this particular zone. Give me a confirmation candle telling me that price wants to head to the upside. That is only when I will jump into this trade. And what is the type of confirmation candle I'll be looking at? Number one, I'll be looking for, since it is price is heading down, I'll be looking for a full bullish engulfing candle or a hammer or any candlestick pattern that signals a reversal to the upside. That is what I'll be looking for right here. And another reason why so many traders get kicked out of trade at this particular zone are because there are so many traders out there that trade the news. And you know that during news release, the market is very volatile. Market can spike up and down the whole place. So one of the ways you can avoid the price from hitting your stop loss before going into your direction, then you start blaming yourself that your strategy doesn't work or the market is after your life. It is best you wait for a confirmation candle at this support zone right here before taking price all the way up. Another way you can prevent this particular incident from occurring, sometimes it depends on the type of broker we use. By the way, the link to my favorite broker will be at the description of this video somewhere around. Make sure to click it and check it out. So sometimes, as I was saying, it also depends on the type of broker we use. Sometimes brokers influence price just to take traders out of the market before rallying to their direction. I've been in such situations where I enter a trade, and this was the funny thing that happened. I entered a trade in two different separate accounts with two different brokers. Can you imagine that? One took me out for a loss, and the other one was not even close to my stop loss. So sometimes brokers also influence the market manipulation right here. Another way you can avoid this from occurring is not placing very tight stop loss. I have seen traders that place very, very tight stop loss. Placing very tight stop loss doesn't guarantee that you must necessarily be in profit. Sometimes give your stops air to breathe. For whatever you are targeting for whatever you placed as your stop loss, you should be targeting a risk to reward of 1 to 2. It doesn't depend if your stop loss is 10 pip, 20 pip, 30 pip, but whatever you place as your stop loss, let's say you place a 20 pip stop loss, you should be targeting 40. If you place a 30 pip stop, you should be targeting what? 60. So putting type stop loss will also affect you negatively if this type of things occur. Another way to avoid market manipulation or your stop loss getting hit, then price going to your direction, is to watch out for fake outs. This right here is an example of a fake out. So guys, this is what market manipulation is all about. And as I've told you, how to avoid this is one, wait for a confirmation candle to signal you that price wants to reverse to the upside. Two, don't place tight stop losses. 3, be mindful of fake outs. 4, if possible, stay away from news trading because it won't help you. It won't help you on the long run. An example of this type of thing happening on a resistance bar is look at this similar thing. You can see how price is retesting this bar. Price is retesting it, but for some reason, price broke past this bar and still closed below. Price broke past that bar and still closed below. So guys, this is how to avoid market manipulation. And if you should implement everything I have said here today, the way your stop loss get hit be minimal. And let me not also forget to add, managing risks is very, very crucial. If something like this should happen and you were able to manage your risks properly, you shouldn't be emotionally down when things like this occur. What do I mean? Let's say, for instance, you go into this trade and you have a stop loss of 30 pip. Then after calculating your risks, you have $1,000 and you tell yourself that you are only willing to risk 2% of your account, meaning that if this trade should hit your stop, you should be losing just $20. And once you are able to ascertain the amount of money you are risking in each particular trade, things like this won't affect you much. So guys, that is all about market manipulation. I hope this video will help you in your trading journey. If you like contents like this, or if you want me to continue bringing up contents like this, please don't forget to hit the subscribe button. Drop me comments at the comment section telling me the kind of videos you guys want me to do. Make sure you like and also share videos like this to your friends that will also see this beneficial to them in their trading journey. So that will be all for my time today. See you in my subsequent videos. Stay tuned and peace out.